incredibly fascinating day on S&P. 3 trades today, 1 negative, 2 positive. So here is the second trade. Been monitoring since this open this morning. Very important level 1762, because we knew once 1762 is broken, that's when the sellers will step in with vengeance. But don't be fooled. My 5 range, my trade had reached danger zone level. My trail BE, profits taken at this level, is very critical. If this level is broken, my chart and my price, my guiding light will head to 1758.75. So let's see what the price will do. Why is S&P being so jittery and so unpredictable? Because the fight on the daily chart is on. You're witnessing how critical these levels are. Formula remains the same. It doesn't matter if it's daily, it doesn't matter if it's 5 range chart. All of the levels drawn here first week in October, and these levels are still being respected. So here it is. Will S&P continue its collapse? Will it continue blasting? If it will break through my danger zone, I will go into the wave expansion. As we discussed, the bearish structure was dreamlike formation. That's why we were waiting for this level to be reached. So pretty please, 2 points later, respect this level. Stop break even, monitoring the response very carefully. This is the most critical level in the market structure. This is the end of the minor trend. This is exactly as a reminder S&P reversed from when it collapsed from decision point 2. This is why this is a battle zone on S&P daily. So if you don't know where danger zone levels are, and if you're acquiring your short trade anywhere near these levels, nothing good happens. Price is incredibly predictable. All you have to do is play by the rules. Let's monitor the response. That's exactly why I named this level danger zone. Because this is where trade gets very tired. This is where trade shows reversals and exhaustion. That's why trailing and protecting your profits is absolutely essential. This is exactly the same level where oil had been giving the slowest formations in years, because oil daily dancing at the danger zone level. You see? The magic love, the huge selling pressure for how many days? 1, 2, 3, 4, 5, 6, 7. Couple ticks prior to decision point 1. Sellers step in each and every time, but this was a reversal from danger zone. This is exactly the same level where our trade on S&P 5 range is showing up in staging reversal or exhaustion. And this is exactly the same level where oil monthly trade is dancing for weeks. We're not finding many buyers. Tomorrow is an incredibly important day on oil. We're not going to have enough supply. The rally will be magnificent. We have spectacular shortage of supply. It can be quite cumbersome. So what we would like to see is not enough supply. And this is a reminder, know where the end of the minor trend is and know where your trade exhaustion level is. Will S&P continue further up? Trail 1762. So again, 3 trades today on S&P. 1 negative, 2 positive. Both trades on S&P, positive trades, had reached danger zone level. Simple and pure. If you're remaining conservative and you're staying out of the fluff, trading becomes incredibly predictable. And the key remains simplicity, patience, and discipline. And do remember that oil is not for newbies. And the key is to become, in trading, master of one. Because if you're trading multiple instruments, you become master of none. Oil has nothing in common with S&P when it comes to behavior. Nothing. Zero, zilch. Oil is drastically poor liquidity compared to S&P. Take a look. What is oil 8 range doing? Let's see. Oopsie, 768 contracts. What is S&P 5 range doing? 4,400 contracts. But let's compare apples to apples. What is S&P 8 range doing? How many contracts there? Almost 12,000. Do you want to be part of a group that's 12,000 or 700 or 400? Do you understand how critical the liquidity is? Do you understand what are you trading? There's so many times traders come to me and say, I want to trade Russell. You do? Do you know where Russell is based from? And typical answer is, no, I don't. I think in Chicago. Not anymore. It's been years since Russell been removed from Chicago. ICE exchange is gone. Know what you're trading. Knowledge is the key. Trading is not investing. Trading, you become master of one or master of none. S&P is magic. Liquidity is here. Incredibly well-behaved instrument. But lately had been drastically more jittery than oil, which is the most unusual behavior we've seen in years. And it's incredibly important to respect that. So there we go. Danger zone is causing major problem, as expected. Doesn't matter if it's S&P 5 range, oil monthly, weekly, whatever it is. Formula remains the same. Out of S&P. Know where danger zone levels are, know where to take profits off the table, and know what not to enter into. So the battle continues as daily chart showing us very, very clearly. This had been going on since October 30th, and today it is November 12th, and this range remains in play. But formula remains the same. It doesn't matter if it's S&P daily, if it's S&P hourly, if it's S&P 5 range. Know your levels and know where to take profits off the table. That's simple. All you need, patience and discipline and 4 simple rules. Adios everybody. Look forward to seeing you tomorrow.